Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, September the 18th. We had a pretty much of a benign day yesterday, all due to the Jewish holiday. Very, very quiet, low volume. We did have a little bit of a pullback yesterday, but it was really a useless day unless you found some sort of a catalyst. Like I always mention, when you have days like this, a downgrade and upgrade, and even then it gets to be a little bit whippy. But nonetheless, we were there yesterday watching the markets, and really not much markets to give you too much. And as you can see here right off the bat in a 5-minute chart, we just kind of drifted, and we made actually a new low for the day, just about the last half hour, and then they started rallying and taking back a little bit of some short covering. But other than that, very, very quiet. Digesting what the Fed did on Thursday and, of course, on Friday's rally, to be expected. And I always mention a nice pullback, some sort of a low-volume pullback would definitely be bought up. I do think that this market probably is going to test the 1500 area sometime by the end of the year. And that's because we're going to have people chasing performance. And with the Fed throwing unlimited amount of cash into the market, and as of right now, it's a $40 billion a month mortgage-backed asset purchase program. That's enough. It is actually the lowest of the QE 1 and 2 program. However, it's still enough to pump the market up. So any type of pullback would be a healthy part to add to your long position, and or, of course, add new swing positions for the coming weeks and months. Now, we are approaching seasonality weakness, September, October. But again, guys, news can trump the charts. As you know, we have all of this negative divergence forming in the markets. And sure enough, Mr. Bernanke and company throws money into the markets, and that's all needed to be done. Now, we do continue to see weakness in certain sectors and certain areas, which I'll point out again today. And sometimes it's a little bit monotonous, but I still want to get that out to you and point out certain areas. But really a 2 to 3% correction would be really, really healthy. Now, we are in options expiration week, and generally Monday, Tuesdays are a little bit weaker. And then you get some sort of a bullish run into the week, and then but overall the week is generally bullish on options expiration. But we really don't know that. We need to see. There's really not that big of any economic data coming out this week. We do have some. You check the morning call, email. I have it all down there for you. But what's really going to be a factor really is going to be earnings. Now earnings is on our way up, and did a little research on that. Many analysts have reduced their quarter earnings estimates for large big cap companies coming in recent weeks. Their additional guidance is likely during the next 3 weeks, as a lot of these companies are going to really report and confess and say that we're going to be lowering our guidance at third quarter results. So that's going to probably hinder on some of the companies. But again, while analysts lowering the bar, it does make it also easier for these companies to surprise and beat. So it's a cycle. It's a vicious cycle that the Fed does, and how analysts can lower rates and lower the guidance and say, okay, well, you're not going to beat, so we're going to lower your estimates, and then all of a sudden there's a big surprise when they actually said, hey, a company X is gonna, well, we're not gonna make our earnings estimate. We're lowering our guidance, and all of a sudden, analysts lowers their expectations, and then all of a sudden at the earnings call they end up beating her. So it's basically a vicious cycle. But nonetheless, we are going to be looking out for earnings, and earnings is going to be really a key driver now going in the next several weeks to come, because a lot of these risk events are out of the way. And last night, and I keep mentioning about China. China is in trouble, and that's going to all eyes once ECB and everybody else is looking forward now that the euro is not going to be broken up and the Greece is not going out of the euro and what have you. All eyes are going to be focused on China. Is it going to be a hard landing or not? So we really need to keep an eye on that, and that could be a real big game changer. Okay. However, we trade what we see, and as of right now, we should be looking to buy stocks and stick with the trend and buy any kind of weakness until otherwise, right? Until we can really break down and lose some real key pivotal support. I think any weakness will be bought into, and that's something that we need to continue to stay. No sense trying to fade anything, fade a move or look to get short because it's probably going to be short-lived, guys. All right, so let's go right into the charts here. And again, really quiet. As you can see here, we really had nothing going on here. We were basically flat pretty much up until about 1 o'clock, 1:30, and then we rolled down a little bit and then popped back up. It was such a quiet day yesterday. But again, that'll change as the days go on. NYMO, we had a little bit of that overbought reading, and then we started rolling back down again. So really, this indicator hasn't been telling us much since mid-July. We've been either basically telling us that we can move further into an overbought state or we can move lower into an oversold state. So it really hasn't been doing much. But copper here, it keeps telling the story, right? We had a big move up in copper. Love to see this thing pull back a little bit. We did have an engulfing red candle, but again well, I wouldn't say lower volume. It's pretty much volume has been higher than usual. So on the copper side of the volume, that's interesting to see. Well, we'll see now if we can get that pullback back down in here, make some sort of a higher low from this area, and then really start to take off. Then I'd say you have some. But look at how overbought the RSI is. So that's something that I want to really keep an eye on. Now, the S&P equal weighted index versus the large cap starting to roll back down again. There's that 200-day I keep looking at, and we started pulling back again. Again, healthy, nothing really big, no change, but we wouldn't want to see it really break back down below here. And then if that's the case, then we might have some issues. But as of right now, this is looking okay. Nothing really much to tell. I want to want to show you bonds. And as you know, obviously, bond prices will get decimated while the Fed continues to devalue the dollar, basically, and put pressure on yields. And now look at this here, the bonds, 30-year bond price. Back held the 200-day moving average. We've got a big black candle here. So this really could go either way. If we do see some additional movement in equities, money will come out of bonds and actually go into risk asset currencies, commodities, and what have you, and then roll back down again. And then this will really start taking out this area here. Next stop will be right around 142. So again, bond weakness really signals equity strength and commodity strength. So again, another thing that I like to look at the end of the day as well. Now, speaking of that, let's look at the U.S. dollar. We had that bullish falling wedge. We broke down out of this long-term trend line. Now we're holding this area here, which is pretty decent support. Okay, got a lot of support in this area, and we did have that little pop-up yesterday, and that produced a little bit of weakness in commodities. A lot of the soft commodities really got hurt yesterday pretty hard. I don't really trade the soft commodities, but I do follow it. So you got to really look at what's happening here. But really, not much. I would like to see a little bit more of a bigger bounce, but another sharp, steep falling wedge. I do think the dollar is due for a real nice-looking bounce here. That would put pressure on equities and commodities and give us that little bit of that correction that we're looking for to eventually get long equities going into the year-end rally. So right now, seasonal weakness is right around the corner, September, October. But if you remember, the last couple of Septembers, really, we didn't have that seasonal weakness. And again, and that's all due to thanks to the Fed. So that could actually not happen. So we just want to make sure that if we are looking to get short the market and short stocks, we want to make sure that all sectors and indicators are really pointing in that direction, okay? But right now, we really got to break out of this bullish falling wedge to really validate this bullish pattern here, okay? But again, something to keep an eye on, something to look at. It's deeply oversold, as you can see here on the RSI. So we are looking for some sort of a pullback. Now, take a look at the VIX. VIX really didn't do much yesterday as well, but it was sitting right on support. So a bounce in the VIX, a bounce in the dollar, a sell-off in equities looks pretty much some sort of right around in the cards here. So we'll again like to monitor and see what happens. But if you look at the Shanghai, it just cannot get, and that's really puzzling to me because the Shanghai really is a key barometer of global growth, especially with China. And I keep mentioning to you, and I mentioned back up in here, how China really is slowing and really is going to produce a hard landing. And I think that that'll be the next catalyst for the markets to sell off, is when everybody said, all right, all eyes are on China. China's getting a hard landing. They're not stockpiling commodities, and then we would really start to look there. And I think Australia will be the first one in New Zealand to get hit hard because it's in that region. Okay, now let's go right into the charts. And again, guys, quite boring. Here's a weekly chart of the S&P. Yesterday was just the first day, so I'm not going to bring this up until come Friday. But as you can see here, we're just hindering right above this area. If you look at the volume zones, we're sitting right above it. This could actually take a clearly run up to the 1500 in a matter of days. I mean, if not the one day. So, but we're tired. I mean, if you could see, look at the daily chart, breaking back out above the Bollinger Band, overboard MACD stochastic. So we are overboard, and again, a clear move back, some sort of a low flag volume pullback back into this area of support would be healthy for the markets to move. Cannot continue to rise and rise without then some sort of a really steep correction, and that's something that we're going to keep an eye on. Take a look at the hourly chart, and what happens is once the daily chart gets pretty monotonous, I like to dial it down and take a look and see where we are. And this chart here in the S&P 500, the cash, is 60-minute. All it is a flag. So, and they're all like that on all of them. I'm not going to bore you with the details. If I just go like this and point out, you could see how we just basically flagged right to the 20-day moving average, 20 period, moving average. Here's your flagpole, real nice looking flag. So, honestly, quite bullish. I mean, we really are bullish here. Nice bull flag. And, this actually measures up into the 1500 area if you take this flagpole and then put it right up in this area here. So this would actually measure up into the 1500. And this Russell, all of the sectors that we follow, they're all like this. So something that I wanted to point out to you guys. Here's that 30-minute Bollinger with the Bollinger Bands. As you can see now, we're starting to tighten again. So we're looking for some sort of a move. Again, it doesn't tell you where and how, which way it's going to go. But again, tightening Bollinger Band, pressure's building a little bit. So we want to just keep an eye on that as well. Now, going to the regular S&P, lower volume yesterday because of the holiday, obviously. Thursday and Friday we had that big breakout. But this is, again, overbought, and we really need some sort of a pullback. When they get out of these Bollinger Bands, when the price action gets out of the Bollinger Band here, I would usually looks to some sort of a fade back into this area here, into the support area. But again, low volume yesterday. So even the pullback yesterday, you got to discount it because of the low volume. And mainly, even if you had that, we had that rally since June 4th was on low volume, but then we really had some confirmation that we had that Thursday and Friday we had some sort of panic buying. So there's something really to keep an eye on. Transports, again, look, guys, really making lower highs here. We had that double top area here formed, and then we had this big engulfing candle. And it's just funny. Just about a year and a half ago, you see the transports, Shanghai weak. VIX at certain areas in the dollar, you'd be like, wow, market's ready to roll over. Well, unfortunately, that's not the case this year. So things do change, and we really need to be aware of that and not just go out and look to buy or short something just because. We want to make sure that we have other areas, powers of B, such as the Fed. So we really need to wait and be more patient to see where the market goes. Okay, a couple more. Sorry about the video being a little bit longer, but I just wanted to point certain things out. Same thing with the IWM Russell, little doji star here, light volume. So we'll look to see a little bit further weakness coming into the Russell today. We have the SMH here, really not doing much here, just kind of staggered, sitting around here. And right now, they usually have seasonal weakness as well. Now, Apple breaking the 700 barrier here, hitting that 700 yesterday, and that's going to carry the Qs. As you can see here, Qs didn't do much. Really, really low volume, but didn't sell off, and that's based on Apple. Look, quick daily chart here. As you can see, real light volume, and Qs didn't really go anywhere. And again, guys, due to the Apple, so you got to kind of be aware. If you're trading Qs, you really need to see what Apple's doing intraday. All right, guys, listen, have a great day today. Be safe out there, and let's see what happens in the coming days. Hopefully we can get some movement. I'd like to see a little bit of a pullback here so we can look to buy some stocks. Our coal sector is doing really well. Had a light volume pullback, a little bit more of a pullback, and I'd say we look to get back and buy some of the coal sector names, ACI, ANR, CNX, BTU. Those are some of the names I really, really like, and we're going to be looking for further weakness to buy on those dips. Okay, have a great day, everybody, and I'll see you tomorrow. Take care.